Breath readings are so important. You've heard me talk about this many, many times over the years. It's something I look at every single day because I want to see what's going on underneath of the surface, right? We know that a lot of the indexes are extremely top heavy with a couple of names making up a huge weighting. And so if those names are holding up, the indexes tend to hold up. Well, that might not be what's going on under the surface. So we like to take a look at those breath readings to get a better understanding of what's going on. And when you can combine breath readings with the major levels on the chart, that's when things get really, really helpful, right? Here's the New York Composite Index. We talked about this level. The last time we looked at this chart, we laid out that 14,000 is the zone that has to hold. We came in, we tested it once, we tested it twice, and we've had that nice rally here over the last couple of weeks, right at that major level. All right, a lot of stocks look like this. We've taken a look at a ton of names going into the earnings season. Decade-long major levels of support that we broke out from a couple of years ago were being tested, and they were being tested from above, right? Previous resistance becomes support. That principle has played out very, very well here over the last few weeks. And couple that with our breadth readings. Now, what I have on the bottom is the advanced decline cumulative index, right? More stocks are going up on these green days, more stocks are going down on these red days. This year starts here, and you can see it has been a sea of red. We have a couple of pockets of bounces for a couple of days, but it has been a sea of red until we got to the middle of July, and this has headed back up nicely. Now, I like to take a look at this not on a daily time frame, but on a weekly time frame. The signals tend to be more clear. We get a lot less wishy-washy of multiple back and forths over a couple of days. And what you can see right here is this year, up until 2 weeks ago, we only had 1 week where we had more advancers than decliners for the entire year. It has just been this sea of red, and this has started to finally turn around and go the opposite direction. All right. We want to continue to see that breadth readings rise to give credence to this move that we have here continuing to the upside. All right, we're going to pay very close attention to this over the next couple of weeks. In the beginning of July, things were so bad that more than 95% of the components in the S&P 500 were below their 50-day moving averages, right? We went from 95% below to 75% or more above within the last couple of weeks. That is a huge breadth thrust. That is across the board. We have the majority of stocks underneath their 50-day moving average, a wide majority below their 50-day moving average to a wide majority above their 50-day moving average. And when we look at this data going all the way back to the 1950s, right, these types of breadth thrusts are extremely positive to the market 6 months and a year later. Percentages of 84% positive 6 months later, 88% positive a year later, and only really two big negatives, 1969 and 1965, right, off of that list. And we can segment this down to it happening faster. When we look at that same data set, but this time we put the added qualifier on within a 2-month time frame, the amount of signals lessens, but what we see is very clear. A year later, it's positive 100% of the time. 6 months later, it's 92% of the time. When we get those massive changes in a very short period of time, that has done a very good job historically of marking a bottom, right? That does not mean that we have a bottom put in place right here, but when we add up all of the weight from all of the things that we're seeing, we've got a majority of stocks testing those major long-term levels that used to be resistance. They're now testing it as support. We've seen the advanced decline line finally turn positive. We've seen the majority of the S&P 500 stocks back up over their 50-day moving averages, right? These are a lot of positive signs all happening at the same time. It is worth continuing to pay very close attention to. When we get back to this chart here of the New York Stock Exchange, I'm going to go ahead and remove the advanced decline on there, right? This is the key on this chart. We spent a year essentially above this zone. That's at 16,000 and then fell back below. Yes, we have held, but we have not, once again, proven anything on these charts until we start making those higher highs. And on the New York Composite Index, that's that 16,000 zone, right? We still could very much have a bear market rally and can roll back over. That is within the realm of possibilities. And that's why over the last week or so, if you've been watching the earnings videos that we've been putting out, I continue to talk about, yes, the bulls did what they needed to do. They held support, but they have not done what they've needed to in the other direction, which is take out those previous highs. And so the battleground here, and it's looking like we are going up towards that 16,000 level to test those previous high zones on the S&P, on the New York Composite Index. And what happens up at those levels is going to be very, very important. If the market can put these levels behind them and get back above them, that is a huge change of character, and that gives a lot of credence to this being a turning point. If we run back up and we fail here and we start to roll back over, then once again that 14,000 level is going to have to be the area which the bulls defend. What happens here over the next couple of weeks is really, really important. The rally that we've had over the last 3 weeks have been extremely strong. Can the bulls get us to that resistance zone and finally break through it? That's what we're going to continue to watch. I hope you all have yourselves a fantastic week. Tons of stuff to pay attention to going into next week. Many, many key levels that we will be watching. We'll be back next week with a lot more content for you guys. Enjoy the weekend. Take care.